Hey, it's 2026 and the Jacksonville rental market is actually doing pretty well. So if you're an investor or a landlord, this is going to be a cool little video that I made for you to follow along. So over on our website at propertymanagementjacksonvilleflorida.com, our One Realty management team has a bunch of 2026 key statistics. So let's dig in. The average monthly rent by property type. Studios are right around $1,038 per month. One beds are running $1,300. Two bedrooms are $1,528. We've got three bedrooms at $1,883, and single family homes as an overall statistic running between $1,700 to $2,500 per month. Now remember, this is an average across the entire city. So the overall range is $1,300 to $1,550. That seems really low, but that does take into account studios and one bedroom apartments as well. So the year-to-year change is from 1.4% down to 1.9% decline. That means that rents have come down just a little bit. We saw rents really kind of skyrocket after COVID, and then we saw them kind of dip down a little bit. Now they're mostly staying stable, but it also kind of depends on the neighborhood. In some neighborhoods, you'll see like a lot of landlords list a lot of properties for rent at one time. That is 100% going to decrease the amount of monthly rent in that neighborhood because of oversaturation with properties being for rent. Okay, so Jacksonville is still 20% less than the national average of $1,625 per month. So that takes, of course, expensive markets like California and New York and some of these other markets into account, also like the Northeast. But at the same time, it also means that Jacksonville is not like the cheapest place ever, but it's still very affordable. So market vacancy rates is another statistic that we like to look at, running between 5 to 5.2%. As you see on the chart here, that's probably, we really want to be more in the orange, like in that 3% range. So we're running a little higher vacancy, but one of the things that's really cool is the rental growth forecast is still modest, but still good. We're not in the negative. We're looking at 1 to 2% annual. In high demand areas, it's actually closer to 5%. And the market status is we're in a cooling phase, but also with stabilization. So not the worst thing ever. Like I said, it's good that we have stabilized. Now we know what to expect. As we go through the rest of the year and then look on into 2027, we feel like because of the population and job growth, that we will be stabilized here in North Florida. So that's kind of the next statistic to look at the bottom left of the chart here. Population and demand drivers. What's driving demand? So 100,000 more people and the population coming up. Once again, so we are an MSA, like we have Jacksonville in its core, and then we have like the surrounding counties. We have St. Augustine, and we're not too far from Orlando. It's not too bad of a drive for that. We're still in Florida. We've got good job growth. And let's look at the 2017 to 2019 growth rate was 3.6% annual. Key employers are like Fortune 500 companies like Mayo Clinic, Naval Air Station, CSX, and some others. So people are still relocating here. And as they do that, they will find jobs. And as they find jobs, that'll help stabilize the economy. There will be a demand for rental homes. I think because incomes haven't kept up the last couple years, I think affordable housing is going to be where you're going to want to be at. As you see, like the ranges here, these are not super expensive rental properties. And I think that there will be a high demand for those. Interest rates, I'm thinking between 6 and 7% is probably where we're going to land. One of the good news is there's some good DSCR, those debt service coverage ratio loans out there. I've got some pretty good buddies as lenders that can help you with those. Those rates are not crazy. They just want a good property. They want them to cash flow, and they're going to want to see a little bit of skin in the game. So we'll wrap up with some of the top investment neighborhoods and high growth areas. This is based off of the statistics. 32218, median rent 1676, median price right at 299,000, so just shy of 300,000. Some other cool statistics are East Arlington and West Side are under $1,600 a month rent right now. San Jose and Arlington, both great neighborhoods. 40% rent growth happened between 2022 and 2024. As we talked about, that's kind of cooled down a little bit, but still very, very mid-type, right in the middle type neighborhoods. So people that work at NAS and have good jobs, they're going to go out there and they're going to rent that stuff. People that work at Mayport, they're going to go over to Arlington and they're going to rent those properties. Springfield has saw a 67% rent increase since 2017. That's crazy. What that means is that the area has come up. I'm seeing more restaurants coming in. I'm seeing more people want to work and play in the same area, and that is good for rental growth. And then finally, where my good buddy Gary lives in Murray Hill. Sorry, Gary, but $240,000 to $300,000 price range. We've seen that area kind of come up and then kind of stabilized. I really do like that area as a good neighborhood to rent in. It's got the park, it's got restaurants. It's a good, right in the middle type neighborhood. And I think the growth is going to do well there. So as long as you can find a good deal, as long as you can set the rent correctly, you're going to do very well. If you need any help on the property management side, or if you just have any questions about investing in Jacksonville, or you need any statistics whatsoever, please reach out.